Hello folks, this is Tony Drake from Drake & Associates with an educational economic update for July 2018. In this month's video, I'll discuss some of the major headlines that influenced markets in June. I'll also provide insight into what these developments could mean for you as an investor. As always, please stay tuned at the end of this video for a required disclosure statement. We are now halfway through 2018, and the markets have certainly given us a lot to think about this year, including increased volatility. If you recall, January brought new record highs for major U.S. indices. Then we saw concerns about interest rate jumps reversed some of those gains that we saw earlier in the year. Next, equities began to rebound thanks to positive economic data and corporate earnings before the current trade tension brought volatility back to the markets. Now, while we saw these fluctuations, indexes have had mixed results. In June, the S&P 500 added 0.5%, and the NASDAQ increased 0.9%. Meanwhile, the Dow dropped 0.6% during the month. For the year's first half, the S&P 500 was up 1.7%, and the NASDAQ gained 8.8%. The Dow, on the other hand, was in negative territory for 2018, losing 1.8%. From economic data to political updates, much of the information we received last month also painted a picture of current circumstances. Let me give you an example. Unemployment hit its lowest level since 2000, but the latest gross domestic product reading missed expectations. Also on investors' mind last month was the year's second interest rate increase from the Federal Reserve. When announcing the increase, the Feds gave an optimistic view of the economy's growth, which is always positive, and indicated that 2 additional rate increases could occur this year. Throughout June, we also experienced an array of dramatic geopolitical headlines. President Trump met with North Korean leader Kim Jong-un in a highly anticipated summit. Now, despite expectations, the meeting had little effect on stocks. Concerns about a trade war, however, weighed down the markets for much of the month of June. From Canada to the EU to China, trade tensions between the U.S. and many other countries continued to rise. The United States added new tariffs to goods from some of our largest trading partners, and those countries promised their own tariffs in response. Now, while that drama did affect stocks, markets have remained relatively stable despite the escalating rhetoric. So far, fundamentals have been the true market drivers this year. Now, as we move into the third quarter, trade will be an important detail to monitor. But it's certainly not the only detail. In particular, corporate earnings will be key. The most recent data indicates that corporate earnings may have grown by 20% in the second quarter. If the results mirror these predictions, such performances would be the second fastest growth since 2010. Currently, the markets feel like they're on a seesaw between strong economic fundamentals and escalating geopolitical tensions. Now, amid this back and forth, we'll be searching for a balanced perspective on your portfolios and where the economy truly stands and what might be on the horizon. Now, that's it for this month's Educational Economic Update. You can always visit us at wealthwisconsin.com to learn more about our workshops, and be sure to listen to our Retirement Ready show on AM 620 WTMJ on Saturdays at 1 o'clock. Once again, this is Tony Drake from Drake & Associates signing off for the month of July 2018. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call. We'd be happy to talk to you.